Hello, this is John Piper with a weekend video clip, and it's Saturday the 29th of March. Looking at the Dow to start with today. This is the 5-minute chart. Just wanted to show you the kind of confusion we're seeing right now. I posted this this chart yesterday in the report. 5 waves down, then this triangle, and so the break would be a good trading opportunity, which it was in the event. These are 5-minute bars, so then obviously there was an initial break straight away, but then it carried on quite nicely. Short-term trade, of course, in this case. I mean, you never quite know what it might be. Then it just came all the way back down again. Now, how do we count this? I would say that if that's 5 waves down, then that's an A with a B at the end maybe, and a C. So it could be an ABC. It certainly isn't. Well, it doesn't count as new impulsive action because, of course, it started with a triangle. So if that's a 1, this could be a 2, and we have actually got something of a 5-wave form here. Quite a few waves there actually. Depends whether you count this initially as well. 1, 2. Start again actually. 1, 2, then 1, 2, 3, 4, 5, and then 4 and 5. So we still have the potential of a further decline here. Looking at that next week. So again, there's another trading opportunity, perhaps, or trading idea, I should say, for next week. But it's a very confused market. It doesn't right now hasn't done a huge amount. Let's have a look at a slightly longer scale. This paints the picture quite well. In fact, you got from the 3rd of March, the whole of March. It's just been going sideways really. This creates what's called negative developments above these highs. The market's having great trouble staying above 16,450 thereabouts, and see the spike here. So 16,450, 16,500 becomes a reference point for sellers. At the moment, because it's going sideways, it's potentially a corrective move. You really want to see a bit of action before you start taking too much note of that. But we have now got the, let's clear it again, that decline there, ABC, maybe a flat in fact, and then there's 1, possible 2, but it's it's difficult to draw any firm conclusion from this kind of action. So let's now have a look at FTSE. FTSE is similarly fairly confused. A clear 5-wave down there, then a very protracted correction, but it still looks quite corrective really. We then get to this action here, so let's go down the scale. Well, my preferred counters, this is actually a 1, although it's an ABC, 2, 3, 4 and 5. I was thinking this may be a 4 that we're seeing now, but because it's now extended, A, B, C, can be a 5 there, now an A, B, C. The corrections are becoming extended. It's not a great thing. Obviously the key point is 6,500. I mentioned this is what I call a garbage bottom. A garbage bottom is really a bottom that's not that well formed. Get rid of these lines. And in this case, the low there was fine. The retest there was fine, but then coming back quite so close there was a bit of a negative. And we now got a triple bottom there. Plus the action off it hasn't been that dramatic. So I think there's certainly a case that we're going to go lower there. Again, let's go down the scale. This is a 10-minute chart. If we go from the low here, which was the lower low below 6,500, to failed break. I said last during the week that you could just build a whole system around round numbers, and this is the case. I haven't actually done it, but I guess I ought to, because clearly that's a great signal. A failed break's always a better signal than a failed retest. The difference is a failed break goes through the level. A failed retest fails to go through the level but still bounces up. But the break's better because it actually sets the scene for a much stronger move, because it stops people out, whereas a failed retest doesn't actually do that. And the market's rather like a train. The market's like a train that doesn't like to carry passengers. So the more it can stop people out, the happier the market is. So we've got an A, B, C here, bit of a triangle here too actually. These things are quite useful for when they get broken. You'll see that there's a big spurt up there. So we then saw a peak here. We've got a 1, 2, 3, 4, 5. So again, 5 waves down. Then you've got a strong but a flat correction. The FTSE is now lower given the Dow. So again, we have got a setup there for a possible short, and I'll be looking to go short on Monday morning. If I see something definite, then I'll issue a report, but obviously normally there isn't a report on Monday. Okay, we'll switch to gold now. Okay, no change here. We have got the market continuing to drift down, and we're now heading for the 32.8% retrace. Sorry, let me just, that's of the whole move up to here. Let's just draw the Fibonacci on for the latest move. Okay, this is the green lines here. It's actually bounced precisely on the 50% level, but not much of a spike. Let me just illustrate that on a shorter term chart. This is the 10-minute chart. So see, 1300 is up here, which became resistance there to an extent, and there actually. So we blipped down, but I mean the low was around 1286, so the spike was just 5 points, which is pretty significant. Okay, it blipped down again, but then this is insignificant also. So there's really nothing much. And also the key thing about buying spike below 1300 is that it regains 1300. So not convinced by that just yet, but if of course equities are rolling over, which I think is certainly probable at the moment, then gold may well have seen a low, and that obviously would be good for gold. Let me just have a look at the longer term chart a bit. Yes, one point to make here is that we have got an A, B, C form with approximate equality, not quite anything, but that's about 1388 down to about 1320, 68 points. So 1340 down to 85. It actually is not dissimilar. So we have got waves A and B of a similar length. So although the spike is not particularly impressive right now, it may well hold, and that could be another trading idea for next week. Right, finally the pound. So with pound euro, we had this peak up here. I was thinking we may have seen turning points. That's 1, 2, and then 1, 2, 3. This wasn't a 4 and a 5. We failed there. But in fact, it's not a trade, but I did buy some more euros at the yesterday. Mainly because I'm diversifying my currencies, really, as it were. I don't want to be everything in the pound. So I've got dollars and Singapore dollars and euros. I'm not saying you should copy that. I'm just saying what I'm doing. So I mean, I think 121 is a pretty good level actually. Although of course with the spread it goes down a bit sadly. And I guess having seen an ABC, then obviously that could be a B. I'm not saying, of course, there's no reversal pattern at the moment, and we could just see a wave down. But having said that, we could also see a blip up higher. So I think at the moment there's but as I say, I think if you're for longer term diversification purposes, that's a slightly different issue. All right, pound dollar. All right, a very similar pattern here. That looked like a 5, but now it's become an ABC in effect, and we've got the blip up, so no real change there. So I'm not sure I had the high in there, so the high was there. So I mean, same pattern, ABC. But slightly longer term ABC. Okay, that's all for this weekend. Hope you found that interesting and useful. So a couple of trading ideas this week for next week. Have a great weekend. Thanks for listening, and bye for now.